Silver is kind of the shining star at this point. It's outperforming. But there's no doubt the chart pattern on gold miners, this kind of rounding formation, you could argue now this is kind of a little cup and a handle formation with built-in bull flags. This is, if we were to do a cup and handle formation, it's typically the depth of the cup is one other way to measure where it could go when it breaks out. So if I was to just throw that on here, let's just pull the chart down. It breaks over the $100 mark, right? Yeah. So it'll be very interesting to see where this unfolds. The first target I gave you, the $68, is based on the daily chart or that was for silver. Sorry, this is for gold miners. But gold miners have got some pretty good potential to the upside, about 31% if this pattern was to unfold going forward.
Amid increasing volatility across global markets, attention has tightened around silver's remarkable acceleration, a move that analysts say is reshaping expectations for the entire precious metals sector. The latest market review opened with a surge of anticipation, as upcoming expert discussions and shifting investor sentiment created a sense of urgency around understanding silver's behavior. With momentum building far more aggressively than earlier in the year, many observers now view the metal not as a secondary performer, but as the asset leading the broader commodities narrative. This shift set the stage for a detailed technical breakdown with Chris Vermeulen, whose analysis helped clarify why silver's current trajectory stands out from its past cycles. Chris Vermeulen notes that the metal's chart structure has transformed into an unusually strong continuation pattern, marked by successive rallies that refuse to give way to the typical deep corrections silver is known for. After challenging former highs near the upper 40s, levels that historically triggered sharp retreats, silver consolidated instead of collapsing, regained strength, and pushed decisively into the high 50s. He explains that this sequence of breakout, pause, and renewed surge is precisely the type of formation that often precedes explosive moves. With fresh bull flags developing and multi-time frame indicators aligning, he suggests that silver now carries the technical potential to reach the mid-60s or even upper 60s within a surprisingly short period if momentum continues to build. These technical signals are further reinforced by broader conditions that are increasingly favorable to precious metals. Seasonal trends point toward a strength window. Speculative capital is gravitating toward assets with higher percentage upside, and the entire metals complex is showing synchronized resilience on both short and long-term charts. Vermeulen explains that while gold remains structurally strong, traders seeking outsized gains are clearly moving into silver first, amplifying its volatility and upside potential. With policy decisions, liquidity shifts, and year-end market flows all approaching simultaneously, analysts warn that silver may be entering a period where technical formations and macro catalysts collide, raising the possibility that the metal's recent surge is merely the opening phase of a much larger move ahead. Now, we present the clips from Chris Vermeulen's interview. Before we continue, please subscribe to our channel and activate the bell icon to receive timely updates. Thank you, and enjoy the video.
Silver's got a beautiful chart. As you and I know, we're in a time where I think silver, precious metals across the board are set to continue to push higher and potentially go really ballistic and take off over the next couple of months. But when we look at the short-term chart of silver, we've had a lot of different stuff, different patterns on different time frames unfold. But we just had this great big pause. We had a big rally up to this level, which, depending on where you want to draw this level, either way, it's a beautiful big pause, a consolidation, meaning that this is just a little bit of a temporary pause before it goes higher. And now we've seen it break out. We've seen it run higher. And now it's forming another bull flag pattern right here. We've had an explosive move up over the past 2 weeks. It's been trading sideways. This looks like a high momentum move, meaning we could see silver, based on this chart pattern, run to about $68, $69 an ounce. It could happen literally within 2 or 3 trading sessions based on this chart pattern. So we could see silver and metals have a big pop this week. So it's pretty exciting when we look at the chart, and using technicals. If we use Fibonacci extension, it gives us a good idea of just this short-term rally and this pullback that we've seen. It tells us where the next 2 upside targets are for silver. So $64 is the next upside target. Based on where price is right now, it's about a 10% move. And if we do have this 100% measured move, that's going to be around a 17, 18% move to the upside. So this could be a really nice explosive move in silver if it can get its momentum going over the next couple of trading sessions. And when we look at, I don't have it for silver, but silver and gold are pretty much the same. When we look at the seasonality chart, as you like to always pull up here, Craig, we're coming into that time of year, like pretty much right now, after the first week and a half or, of the year or of December, we tend to see precious metals want to go higher. And usually gold and silver move up together. And so we're coming into the sweet spot, not only for precious metals, but even for equities to have a final push higher. And so silver is really exciting because percentage wise, it's got a very big move, primed and ready. And as we can see from this last portion of this move, in more or less, it was 5 trading sessions, it kind of made, a very significant move percentage wise. If we look at that move, it was about 24%. So I think there's some excitement just around the corner to end the year on a very strong precious metal note. I mean, if we use Fibonacci retracement, we could say, well, based on that move, the sweet spot will be between about 52.50 up to about 55.40. So right around this breakout zone that you just mentioned, right where this pink reddish line is. So that would be a healthy pullback range. The chart pattern right now is actually primed and ready to pop and really take off. This is a very high momentum move. So if it does pull back, I think it's an opportunity. If you're not long it right now, I think, I do think it's going to move up here. So either way, all the time frames for silver and precious metals are bullish on all time frames to the upside. So at this point, it's in a very strong rally mode. You need to own it. I think right now we're seeing the precious metal space has really come to life. Everybody's kind of on high alert for it. So naturally, we're going to see money move into the more speculative side of things, which is why I think we've seen silver move first. People have moved into it quicker. It's a smaller market. They want to make higher returns. So silver has already popped and broken out. Gold is a little bit more conservative. It still has a very strong chart pattern. This is a huge run up. It's at a big pause. It is pointing to about $5,200 per ounce when all this unfolds. And right now, if we zoom in on the shorter term chart, we've got a very strong bull flag pattern, just very similar to silver. It's had a nice run up. It's had a pullback. And it's just showing that in the short term, while silver shows about a 17% move, gold shows roughly about a 6 or so percent move. And that's typical. Silver percentage wise moves a lot more when it has a run. So I think gold is a little bit slower moving. I find it's more accurate. I find I can win more trades with gold. And see, there's always a trade-off, right? Either you can knock some out of the park, have some huge gains, but you might not win many trades because they're a little more unpredictable, like silver, or you make lower returns, but you win more trades and it's less volatile. So there's two different characteristics between these opportunities. And gold's doing what it does. It's being a little more conservative. It's lagging a little bit at this point. I think money's looking for higher returns than gold, which is silver. And I think miners and platinum and palladium. I think there's money starting to figure out, trying to spread out, I think, in the precious metal space right now.
In recent market activity, precious metals have emerged as a clear focus for investors navigating volatility and shifting equity trends. Analysts note that we are currently in an ideal environment for metals like gold and silver to move higher, with short-term charts offering insight into critical upcoming targets. By examining daily price movements and recent bull flag patterns, it becomes evident that gold could potentially reach the 5,175 level, representing roughly a 22% upside over the next few months. Observers explain that if the stock market begins to stall and cash rotates out of equities, precious metals are likely to absorb that inflow, creating the conditions for a strong upward move. Patterns of repeated 20% rallies followed by brief consolidations suggest the market continues to stair-step upward, providing disciplined investors the opportunity to capitalize on sustained trends without being driven by emotion or short-term noise. Chris emphasizes that patience and pattern recognition are essential for navigating these trends successfully. He notes that weekly charts point to further gains, with bull flag formations and Fibonacci targets offering clear guidance on where metals and mining stocks could advance. While silver appears to be outperforming, gold miners also show significant potential, with patterns suggesting upside moves of 30% or more if the trends continue. Chris highlights that the key is to let the market demonstrate its trajectory, allowing charts to guide decisions rather than reacting to news cycles or emotional pressures. This measured approach helps investors capture long-term gains while avoiding premature exits, reinforcing the importance of understanding both the technical signals and broader market context.
Looked at these yet,
Goodness.
but obviously we've got a pretty explosive bar. We've never seen a bar. I mean, it'd be interesting to go back here. If we look at these green bars, percentage-wise, there was a 149% bar. Let's see what some of these other bars are. That was a 30%. So this bar that we have right now, I mean, if you think about it, it still has a lot of potential to be back similar to the late 70s, where we've seen bigger spikes than what we have right now. But when you look at it from this chart standpoint, it's a pretty big spike. Let's take a look at the log chart. If we kind of look at the log, it gives us a bit more of a balanced view. But I mean, we're just in this big rally mode in precious metals. There's no doubt. The trend is up. I don't think anybody's really trying to pick a top in gold, because that's just a bad opportunity or a bad play. You really just have to ride this trend up until it's proven wrong, and until it reverses on multiple time frames, from potentially the 30-minute to the daily to the weekly or the monthly chart. And then you'll be like, okay, maybe the trend is done. So when we look at it from an annual standpoint, though, the gold has had a beautiful move. If we were to look at it from a Fibonacci standpoint, based on this rally up here, this pullback through here, we have blown past the 100% measured move based on this past yearly pattern. If we go back even further, this is a much bigger one. Let's just clear the chart up. We can go based on this low back over here from 2000. We can go to the peak in 2011, the low back here. You can see here, we're still above all of the targets. And this is why I've been talking about it for a while, is we're in this kind of, I hate to say bubble phase or blow off phase, but we've hit the measured move targets for gold. And so now we're in no man's land. You just have to ride the trend. We're in the perfect environment for precious metals to go higher. And now you kind of drop down to these shorter term charts, which, if we go back to the daily chart, this is where we can get an idea of where the next critical targets are, because the yearly chart, we've already blown past all that. So we could grab the low from this last bull flag pattern, the high that we've had, and this recent low. And this will give us an idea of where this next run is going to go, which is about 51.75 for gold. If we to see what that is, it's about a 22% move. So there's a lot of potential still for gold to the upside over the next couple of months. We could potentially see money rotate into this space. I think one of the big things that'll be interesting to see play out is if the stock market eventually stalls out and rolls over. And if it does, is the money that's coming out of equities, is that going to pile into precious metals and send them sharply higher? I think it will. It's just a matter of waiting for the stock market to actually roll over and start to sell off, and for that new money to be raised to get put to work somewhere. And typically money, when there's cash on hand, people look to whatever's performing best to move into. And I think precious metals are definitely that space. So, I mean, and the 5,200 comes out at anher 20% gain,
There
right?
you go.
That's how the market is. It stair steps its way up and then eventually takes the elevator down. But there's no doubt, like this, we're in a strong bullish chart pattern. And the question is, does this weekly chart go on for another 10 or 12 bars, which could be 2 or 3 months, or does it just pop and break out and pick up speed and hit that next upward target? We don't know, but the trend is up. So you just have to let it mature. It could take 3 weeks. It could take 3 months. It's not about so much timing the market. It's about knowing what trajectory and trend it's on, and then just taking advantage of it. Let the chart do the work. Don't try to rush anything, or else you'll get into a bunch of premature trades or get out of trades too early, because the market, if it doesn't shake you out, it will wait you out. And that's what it did with this last one over here. I mean, it took forever for this bull flag pattern to play out. People started to give up on it, and then boom, it took off, and people are like, people are just too impatient. It's not rocket science, but it is hard to do it because you get hooked into news and emotions, and you worry about giving back too much gain if it starts to pull back a bit, and then you worry about missing out on a move. It's the emotions and the news really take over. If you could pull that away from the market, get that out of your head, and just follow price patterns, which is what I do, which is what I try to help other people do. it really makes things a lot easier. But the problem is, no matter how much I try and keep people on the straight and narrow, like just follow the price charts. This is what it's saying. This is what it's pointing to. They always have all this. They're inundated with news and other people's, opinions and extreme chart analysis that will scare the hell out of people and make them make decisions. So it's really tough. It's tough to put the blinders on and just be like, just let the next 20% move play out. And if it puts in a topping pattern and starts to break down, we'll be able to identify it and we get out. And you're never going to get out at the top. You're always going to have to give back a good chunk of some profits before you know a new downtrend, like the uptrend has ended and then a new downtrend has started. So if you can always realize that you're probably going to give back potentially 5, 10, 20% of a massive, big multi-year trend like this, that's just part of the game, but you have to let it prove that the trend is over before you get out. It's doing similar to gold. I mean, we can look at it here, like you get a rally up and then it pauses for a while and then you get a rally up and then it pauses for a while. So I think you just have to look at this. Miners are a little more volatile. They'll shake you up. They'll make some higher highs, some lower lows, and you won't know what to do. And that's exactly kind of what they've been doing. But there's a pause here. And really all we are right now is the same with gold. Gold, they're just in a pausing phase, right? I'm expecting we're going to see this eventually break to the upside. If we zoom into the daily chart, we get a much cleaner look of where we are. It's very similar to the price of gold here. Yeah. We've got this push up. We got a nice bull flag, and it's pointing to higher pricing here at any point. There's a couple of different bull flag patterns through here. There was this nice one here, and it pulled back.
Yep.
And using simple Fibonacci. I mean, I always use this tool, but to me, it's the most accurate tool there is to identify invisible resistance levels and targets. That's what I love about it, is because most people don't use it, and when things are hitting all-time highs or moving higher, they don't know where to put a target really, but Fibonacci gives us these perfect targets. So based on this previous run and this pullback, and we carry it over, you can see we came right up to the 100% measured move. And so now we're pulling back. So now we have another one unfolding right here. And this will tell us where the next upside target here for miners are, which is around the 90 level. So once they find some traction, yep, I think we could see about a 13% move. What's interesting here is silver has the best opportunity, better than miners. So silver is kind of the shining star at this point. It's outperforming, but there's no doubt the chart pattern on gold miners, this kind of rounding formation. You could argue now this is kind of a little cup and a handle formation with built-in bull flags. This is if we were to do a cup and handle formation, it's typically the depth of the cup is one other way to measure where it could go when it breaks out. So if I was to just throw that on here, let's just pull the chart down. It breaks over the $100 mark, right? Yeah. So it'll be very interesting to see where this unfolds. The first target I gave you, the $68, is based on the daily chart or that was for silver. Sorry, this is for gold miners. But gold miners have got some pretty good potential to the upside, about 31% if this pattern was to unfold going forward.
Looking ahead, both gold and silver appear positioned for continued momentum, driven by broader economic shifts and renewed investor interest in tangible assets. Gold could see renewed attention as global liquidity dynamics and inflation concerns encourage capital to seek safe havens. Technical movements suggest potential for measured gains, especially as market participants reassess exposure to equities and alternative assets. Analysts explain that key levels will likely emerge from recent consolidation zones, which may act as launching points for further upward activity. Silver is expected to maintain its outperformance relative to other metals, benefiting from both industrial demand and investment flows. Observers highlight that short-term accumulation phases may precede sharp advances, particularly if broader market volatility accelerates. Patterns across multiple indicators imply that momentum could persist, with price targets forming naturally from historical pivots and emerging support zones. Investors are advised to focus on trend continuity and volume signals to anticipate the next waves of movement, balancing patience with readiness to engage as conditions evolve. Could a significant shift in global monetary policy or equity market corrections accelerate gold and silver's upward trajectory in the coming months? If you found this insight useful, make sure to like, share, and spread this update to others watching the silver story unfold. Your support helps keep these deep dive analyses coming.